Hi guys, how are we doing? Hello, hello. Okay, Doc, so I'm going to share the screen. So tonight we're going to cover this company. Hi, Nick. The company called Fortescue Metal Group. Fortescue Metal Group. And it is the first time when I'm covering Aussie stock. Previously, I was covering Chinese, Indian, American, sometimes Russians, but never Australian stock. So today is the first time when I'm doing it. And but the way we're going to do that is exactly the same. So first is a disclaimer. Okay, put like pluses that you understand that it is educational webcast and it's not an advice. Okay, you have to take your own circumstances into account before you allocate money in any company which we discussed. All right. So now, first of all, we're going to look at the market, what is happening in the market. As always, US market, but Australian market very often reflects whatever happens generally there. And then we're going to go through this specific company. Okay, and we'll see what kind of trading opportunities exist there, so what we can do there, right? Now, let's start from Dow Jones. As we can see, Dow Jones continues on its downtrend, but although for the last few weeks, we can see it fading sideways. Okay, like if you notice these rolls. And last night, last trading session was interesting because the market opened quite higher, and my personal portfolio was several $1,000s up. But when I woke up in the morning, in Australia, it's in the morning, so I saw that it's actually about the same. Okay, yeah. So and actually, what happened that during the last hours, like during that trading session, the US market started going down after a few earnings announcements. Now, remember that last week, the earnings seasons began, and as a result of few companies, like few banks, they actually had very good earnings. Some of them didn't have good earnings, so it's mixed earnings. All right, and this week more companies even going to tell us about their results, and we might see quite huge volatility on the market. So you have to be prepared to that. Now, also, we have to pay attention to this particular earnings season, because it's different from previous one in the sense that you know that the geopolitical tension in Europe between Russia and Europe, Russia and United States, and it's affected a lot of businesses. So some of businesses, they stopped kind of operating in Russia completely, so they lost part of the business there. Some of the businesses, they were affected by increase in fuel prices, and of course their supply and cost became quite high, and as a result the profitability is affected, and we're going to see during this particular season. Now, some people say that, look, the conflict started quite a while ago, and it's completely correct. The thing is that if we remember that conflict started 24th of February, so, and the companies which have January, February, and March, like first, would say their quarter, so it's only 1 month was affected, and it wasn't affected in the full scale because sanctions were introduced a bit later. Now, already, if we go for later months, April, May, June, so they were fully in that particular period. So, and that's why we have to really pay attention to this earnings season. So don't jump even to the companies like and buy them before earnings, even if previously you could do that, because a lot of companies, they have this predictability score 100, and you practically could be 100% sure that they're going to be in the range of their promises, right? So not this time, okay? Be aware of that, okay? And again, so it might create high volatility in the market as well. So the last session was as example. We could see that the market opened high and then it's collapsed low. Now, let's see what's happening with Standard & Poor. Standard & Poor, very similar situation. We can see that there is a level. Previously was support. Now it's become resistance. So last trading session, we actually reached that, touched it, and then start going down. Okay, so what we can expect, we might trade in this horizontal trend, or if we break through this level 3,800, we might go lower to the bottom of this trend, okay, which is quite possible as well. Now, if we go for Nasdaq, a very similar situation. The only slight difference here that like the top level, I would say it stays the same, about 12,157, and the bottom rolls, like the bottom of each roll, it becomes like higher and higher. So we see the triangle is forming, and usually at the end of the triangle we have a break through, and it could be upside or downside, right? And that's why we have to pay attention to that. And usually it breaks on the level which is like this, the highest part of this triangle. Okay, so that's why if you probably hear what's nearly $1,000 here, so it means when it's going to break through. So we can see the move up. Let's say if it is from 12,000, so it would be $13,000 here, or if it goes down, so it would be $1,000 less. So just be aware of that, and of course, don't rush into buying new assets unless you're confident that your particular company is going to perform better, or if you're trading, so make sure to put stop losses there as well. All right, so it helps a lot. Now, this is Dow Jones, and that's how volatility index looks like. So we can see that we have a kind of level at the bottom. Usually they work in opposite direction, VIX and the other indexes. So we can see here that nearly $24 level. So we already touched it several times. Previously here, we can see that it was previously resistance, right? So around $25 level. And that's here, okay, so and we're repeating this level, so this is pretty strong level. Now at the moment we might break through and go down if the market start to recover, okay, so if the markets start keep falling down, so we might see another spike on the volatility index as well. All right, so this is indexes, and if we look at their profitability, we see that P ratio for Dow Jones 18. And if we look at P ratio for Nasdaq and Standard & Poor, it's 20 and 24. Okay, so, and it tells us that these two indexes, they're a bit like more expensive than Dow Jones. It means that the companies, right, so included in those indexes, they cost more, like the price more based on their earnings than Dow Jones Industrial Average. So people here pay 18 times of their earnings, here 24 and 20. Okay. Now last year we can see that P ratio was much higher, and at the moment the price drop down is first, but also earnings, they actually increased like in majority for the last year compared to the previous year. So that's affected it as well. So we have to take it into consideration. All right, so let's have a look at this particular industry. I've never actually before like covered any industry related to commodities because personally I didn't invest that much in company in this particular sector, and main reason for that it was that the only competitive advantage, like I mean the huge competitive advantage for any particular company is the size and ability to keep the price down. Okay, if the prices going down and the company has certain business efficiency and their like operations, most likely they're going to survive. The companies which don't have this efficiency, they usually kind of get into liquidations and they're acquired by bigger companies. Okay, so that's why the bigger the company and the better their business processes set, so the more possibility that these companies survive if the prices of resources can go down. And the prices of resources, they based on just supply and demand, they're never based on the quality. So if you go and buy any retail thing, you might pay for t-shirt 2 times higher in the branded shop compared to the not branded shop. Whereas if people pay for gas, they pay for gas. If they pay for iron, they pay for iron, regardless who manufacture it and regardless who produce it. So that's why I wasn't kind of involved in that area. A few times I purchased it and sold it, but never hold it for a long time. And because of this kind of unpredictability, what can happen with that sector. Now, that's what we can see, that iron ore is mined in around 50 countries worldwide. And we can see that the price of it moved from, in 2020, it was around $80. Then it's reached $2019 last year, exactly 1 year ago. Then it's dropped back to around $100 and then back to $160, and now it's at the level of $106 today. Okay, so that's where it was. So it's $113 from its peak. Okay, and probably you understand that when the prices go up, what happens? That the companies, if they keep the cost down, so the profitability increases significantly. When the price of iron ore or any other resource commodity goes down, so what happens that the margins squeezed and the companies they start making less money. So that's probably the main reason when we're going to analyze this specific company. So we already see that during the last quarter, reports, let's say 6 months, they reported that they have decrease in their sales and earnings, and the main reason of the prices. Okay, and we're going to cover it in more details. Now, these are companies which trade on ASIC, and they are Australian companies. And the company which we're covering today, it's one of the biggest. I actually thought Rio Tinto was bigger previously because I heard about Rio Tinto quite a lot, but never heard about Fortescue Metal Group. Okay, and actually, if you look, BHP is $185 billion by capitalization. Our company, which we're covering today, is $52 billion by capitalization, and Rio Tinto $35 billion. So they're the biggest one. And then the huge straightaway gap to 8 billion, then 2 billion, and then the company is in millions already. So, and I didn't continue this list, but there are quite few other companies which have capitalization of $10 million, $5 million, or even less. All right. So Australians love create this kind of companies. They get the land, they find investors invest in them, and in the hope that they find another kind of gold mine, right? And or iron ore mine, all right, and make a lot of money. Oh, and as I explained, the small companies, they usually suffer the most because they don't have enough cash for optimizing their business processes. They don't have this economy of scale, and as a result, when the price is high, they're great, they're fantastic. Okay, but when something is going sour, usually those companies, they get into liquidation the first. Okay, in the first scale. Okay, you have all three, yeah, Nick, BHP, Rio, and FMG. So that's great, fantastic. So kind of diversified yourself among biggest companies in this sector. Now, all right. So what's I like about this specific company? All right. So first of all, they're not only like digging the iron, they also invest in infrastructure. And they have everything what they need for supply chain at the moment. So first of all, they have all the machinery, okay, which digs and then brings to the railway station. So it's their own. So they don't have to find subcontractors who are going to do that. So also they have their own train track and railroad. Okay, about 600 miles they're covering with their railroads, which they own, right? And it's also a huge advantage because they don't rely on external suppliers, and nobody is going to increase the price for that particular term, right? So if the travel expense increases, so the company might increase the prices. So other small businesses, which probably using their railway in any way, so FMG can increase the price for them, and they will suffer even more. All right. And also what they have port, and they have their ferries, okay, in order to, like, not ferries, but I mean tankers, right? So in order to bring their goods and transport their goods. So they're covering quite a lot in their supply chain. Also, they produce their products in Argentina, in Chile, Brazil, and Ecuador, and some of it in the Salmon Hub. Okay, Salmon Hub. So it is not just purely Australian, like, I mean, digger, right? So they're digging in different areas of the world as well. So they expanded, like in this way. Another thing which kind of you can see straight away when you go to their website is the fact that they're talking a lot about green energy. So, and their goal and their mission is to reduce the carbon emission and to create as little as possible damage based on that. So they're focusing on developing new energy sources. Even at the moment, their product is not used for energy, right? So it's like iron ore is used to, like, I mean, create metal, right? And which used for building sector. It can be used for automotive sector or any other sector where we require metal. Right? But at the moment, they are focusing their research and development more on kind of area where they can generate this green energy. All right. So the company is looking at the future, and they're trying to build themselves in that area as well. Okay, let's have a look what's happening from the ownership perspective. So we can see that what's the percentage terms here. Now, funds portfolio 17%, investor management 2%. Now it's owner types, but from the perspective, they have quite a lot of institutional investors. They increase quite a lot. There is a percentage of increase. So they increased 100%. So 19% totally owned by institutions. And you can see that lately it's increased, whereas mama data investors, they actually sold off their shares quite a lot as well. So that's what we can see. Strategic entities, they own 49% of the company. All right, so that's how the structure is here. So let's have a look at the like a profit and loss statement. And on the left-hand side, we can see annual. And on the right-hand side, we can see quarterly. It's not even quarterly, it's more like 6 monthly, right? Because they produce reports every 6 months, not every quarter. Rio Tinto actually, as I'm aware, does the same. So let's have a look. Total revenue, starting from 2018, increased from 6.8 billion, then 9.9 billion, then 12.8 billion, and 22 billion. So they have a consistent growth in this particular area. Gross profit more than doubled during the last year, but we're probably interested in net income. Let's have a look at net income. So 879 million, 3 billion, 4.7 billion, and 10.2 billion. So we can see that we doubled the earnings during last year, and mostly it was attributed to increases in the price of ore. Now, the interesting thing about that if you try to focus on what was happening during last 2 years, and we had a lot of lockdowns, and there was a huge disruption in the supply chain, and a lot of businesses that didn't manufacture anything because their businesses were shut down, especially in China. And you probably heard about it quite a lot, that that's the reason for price fall for resources, because it wasn't bought as many quantities as before, and that's the reason for price fall as well. So we could expect that this company had to suffer and had to kind of decrease their sales level and profitability, but we actually see that it's had a very good year, right? So it doubled their profit despite that. Okay, I'm not sure because I cannot see it here, the quantity of their product in cubometers, right? So, but definitely in dollar value, they had a very good increase in sales and the profitability as well, right? Now, and if we look at their let's have a look at the cost. Total cost. Let's have a look at expenses. Interest expense, operating income. Where is it? Okay, total expenses. We can see that during the last 4 years, about 5.3 billion, 5.1 billion, 5.9 billion. So if you look here, for example, right? So the increase was nearly $3 billion, so 30%, but the would say kind of cost increase was only what, less than 20%, right? About 15%. And here we have increased like 80% plus, whereas here we have what, 2.5 billion, right? Practically increase. So it's about 35% maybe increase in cost. So it means that the company keeps their cost down and the sales level increases much more. But again, that's exactly what I was saying in the very beginning. If the company is going to lose volume in sales, so for example, if the price of the iron ore going to be going down, continue to go down, so the expense level is going to stay the same because they still have to pay same salaries to their workers, right? So to their staff, and they have same exactly level of expense as before. So that's what we have to pay, take into account. Now, during the last 6 months, what we can see is a decrease in sales level. So if I don't see here the fifth column because I had to use free sources. I don't have subscription for Australian Morningstar, so I cannot tell right that, but I was using the free sources and I can see that we definitely have decreased from the last quarter. For the last previous 3 quarters, we have growth 6 billion, 9 billion, 12.9, nearly 13 billion, and now it's 8 billion. So we have a huge drop in sales, in revenue, right? So, but expenses, they stay on the same level. So they had $4 billion previous quarter, stayed 4 billion, so increased 100 million on the top of that, and definitely it's much higher than in 2020, all right, so 2 years ago. So operating income halved compared to the last 6 months. So instead of 8.9 billion, we can see it's 4.2 billion as operating income. And if we go to cash, net income after taxes, it's 2.7 billion, so which is more than 50% down compared to the last 6 months previously. So if we would say if the prices of iron ore stay about the same level, and if they operate in the same type of environment, same volume, so probably we can expect double of this price during the next quarter, next report earnings. So we can see about $6 billion in net profit, maybe slightly less. So, and that would be, if we go back, it's like in 2018. So, oh no, sorry, net income. So net income after taxes, probably somewhere in between, right? So in between 2020 and 2021. So in the middle. So it's still pretty good results. Yes, it's dropped compared to the last year, where the prices were highest, but still pretty good results, and companies still making quite good money. So if we look at the diluted earnings per share, okay, so I'll probably go to the next slide and show it here. So at the moment, diluted earnings per share is $3.3, 3.35, right? So, and if we look at PE ratio, it says here 3.8, but I presume if we calculate, if we take $17, which the price is now, and divide by 3.35, right? So we get around 4, not 3.3. Guys, you can probably calculate it and tell me how much is that. But definitely we can see that during the last quarter, so quarter versus quarter, we can see that a decrease in earnings per share. Okay, if we go for trailing 12 months, okay, so it's actually increased. And in 5-year earnings per share growth 60%. So in general, sales, same story. Okay, now another good thing which I liked about this company is the dividend yield. Like here says it's 12%. I know they have a small reduction in dividends, but still it's pretty good. And if we go for historical information about dividends, we can see that they paid 14, 15, 9, 10, 17, 15% of dividends. So it's amazing. I mean, it's very good results. I don't know why I didn't put money previously into this company. I would make probably quite a lot on the growth potential and also on the dividend yield. But you have to take into account that they're actually paying 90%, nearly 90%, 91% of their total income. So they're practically giving all the money to their shareholders as dividends. It's very important to understand that they remain only 9% of the cash in order to reinvest. Okay, is it enough or not enough? So let's have a look at their balance sheet and see how much debt they have. So if we look at total assets, okay, we can see they have 28 billion, like it was last year, and here 25 billion. So we see that there is a reduction of $3 billion in total assets. Now, if we look at liabilities, right? So we had $10 billion liabilities, and actually the good thing about it that look, the total assets increased from 17 billion to 28 billion dollars. So it's more than $10 billion increase within 4 years, whereas the total liabilities they increased only $2.5 billion. So the liability they grow much slower than total assets. So it creates extra additional equity for shareholders. So as we can see here, the total equity was $9.7 billion, and last year it was reported $17.7 billion. So book value increased. But as you can see that during the last 6 months period, they have dropped nearly $2 billion. And the question is why, right? So we can see that part of it attributed to the debt. Where is the debt here? Total liabilities, they paid nearly $1.2 billion in debt, but still they have dropped $2 billion in equity. So what happened? And probably the main reason for this is the price of iron ore. So because iron ore for them is like an inventory. So if they already digged something out, and when they evaluate the price for that, so they take into account the current market price. So and probably last year when they were calculating that, the price was $200 or something about that, and at the moment it's dropped, right? So whatever they had in inventory, even if they have same amount of inventories and the quantity, so the price is different, so they have to reevaluate it, and as a result probably we see this reduction in total assets. Okay, so it's not like they had to write off some assets or anything, so they just had to readjust it to the current price. Okay. So if the price grows for iron ore, so the price will be adjusted as well. Okay, so this is what we can see from that perspective. So guys, can you tell me, as I always ask, is it a quality company? Do you think it's a quality company? Do you think it's undervalued company or overvalued company, or the fairly valued company? So write it down, and we'll continue to the technical analysis. All right, looks good. Quality, yes, it's good. Yeah, okay, fantastic. I find mining hard to predict. That's true. Now, let's maybe talk about the risks which usually these companies have. First of all, the price. You don't know the price because so many factors can affect the price. And the biggest volume of kind of clients is in China. So FMG sells 80% of the iron ore to China. So if the relationship between China and Australia is affected, it will harm the company quite a lot. Okay, because where we're going to sell it. Okay, so India, maybe India, but again, so it's much further, right? So and the volume is not the same. Now, this is one thing. Secondly, when they develop new mines, they might not find exactly the same what they're looking for. So, and that's why a lot of companies with big projects, when they invest a lot, they bring the machinery, bring people, start digging, and nothing is there. All right, so you never know how much of particular material you can find, or vice versa. You might be getting even luckier, right? So you might something precious metals lay on the top of iron ore, so and it will create much higher profitability for you. So that's why I agree with Jeremy that these businesses are not as predictable as you want, but at the same time, the bigger the business, the less it's affected by these discrepancies. Okay, because yes, if you have like $15 billion operations all over the world, and even if you dig one mine, it doesn't work, so then you can dig in another place. Whereas if it is a small company and they put all their money into one location, didn't find anything there, so probably they go into liquidation and you will never hear about them again. All right, so this is like that. So let's have a look at technical analysis. So that's how the company looks like, and the area which I want to see is 2008. We can see that the price dropped from nearly $13 to $2. Okay, huge drop. I don't have financial information about that particular period, but I presume and understand that building sector at that stage collapsed. So I presume the the companies which supply to building sector, to metal manufacturers and then building sector and car manufacturers, they suffered. Every company, every sector was suffering at that stage. And as you can see, the company collapsed quite a lot. So I'm not sure if it was profitable or not profitable at that stage. As I say, I don't have the financial data for that, but we can expect that it went at like negative area. And after that, it was flat until 2018, where it started growing like very quickly, right? So nearly from $4, we grew to $26. Fantastic growth, right? So I wish I buy here, right? If I predicted whatever happened. So, but then we can see the huge drop in 2021, the recovery, and then back again. So let's have a look at closer. That's what we see, the huge drop in 2021. Okay, remember when all prices of resources that start going down because of lockdowns, and it's affected a lot of businesses. Even the oil futures, they went at the negative. So it's first time in the history it happened like that. So it's similar situation here. Now, after that, we recovered, and now we are doing kind of sideways. Not specifically sideways. I would probably, I don't know if I can draw it here. Just a second. I just tried to draw. I have it. Yeah. So we can see it's a bit slide down, right? So something like that. So okay, something like that we can see, and we're at the bottom of this row. Okay. Just one is going to disappear. No, it's not. So how do I get rid of this? Eraser. All right, so let's look at this closer. Increase. So that's what's happening. Okay, we have rolls, let's say from about $17 to $22, so $5 roll. Okay, and then we have also smaller rolls, we can see. And if you look at this particular, it's downtrend. It's nearly sideways, but still downtrend, slightly downtrend. And we can see that sometimes the company going, like the price goes all the way up and all the way down in that pattern, but sometimes it goes only halfway. Okay, so just half of this trend, and here from the top we can see again. So one times it's touched the middle center and then up, down, up, down, up, and again. So broke through, and now we're doing exactly the same thing, but from the bottom. Okay, so we're doing this roll. Actually, if we look at the last few rolls, smaller rolls, they're kind of narrowing down. So we can see that we're creating this triangle. So this is from 16, probably 70, and here 1870. So it's around $2 move up, then down, and then smaller move. Okay, 1620 to 1770. So $1.50, then about $1, and let's see what is happening here. So are we going to break through, or we're going to kind of keep going into this triangle until we have a later breakthrough? Now, again, remember that the breakthrough, when the breakthrough happens, usually it's like a foundation. So if we have it here $2, so when we break through, we have $2 up or down. Right now, if we go $2 up, so it depends from what area. So, but if we start from here, so it's about $18. Right, so roughly. If we go down break, so probably we go from $16 to around $14 level. So that's where previous support was. Okay, so another level. So be aware of that. Now again, so what can affect earnings? We have like end of August, like earnings announcement, right? So based on that information, on the website I couldn't see it, so I cannot tell you exactly if it is exact earnings, or maybe it would be different, because their earnings, like I mean, the date which they have to report, it's probably 30th of June, right? So it's nearly 2 months taking them to calculate the profitability. I think, guys, they can make it faster, right? So we might see any time, even in July. So it's right now about this earnings. Okay, so be aware of that. And when the earnings happens, so here we had a drop, here we had a gap, here we had a gap again. So during earnings, it's kind of moving down and up, right? So, and we can see that the green one, it tells us that the company was better than expected, but despite that, it had a gap down. Okay, and here 2 times their earnings were worse than expected, so that's why it's red. So we don't know what's happening here now. So this is, guys, technical analysis. So before we go for options, so a trading strategy from my side, I'm asking you a question, right? So what do you think, if you like this company only? Okay, so if you like this company, where would you trade? What areas? Or would you monitor it, and will you watch it, or you buy this company? If you buy at what levels? If you sell at what levels? Right. So we look at the option strategies a bit later, but you have to know the entry level and exit level. Okay, Nick bought already for dividends. What level did you buy it at? Dividends are fantastic, really. It's great. Okay, guys. Cannot remember was part of. Okay, so maybe around 16 bucks. Okay, so it's somewhere here. So it's actually the lowest part was $16.2. But if it continue another roll, it might touch a 16. So spoke at 15. Okay, I'm not sure. 15 is even doesn't have any here levels. Somewhere here, something here. Yeah, maybe 15. Okay. Okay, anyone else? All right. So silence. So what I personally actually already traded it a couple of times. So I sold puts here, bought them back here. Interesting enough that when I was selling them, I sold at $70 strike price, and the price was around $70. So I did it somewhere here or on that roll. Don't remember which roll I was, and so I got nearly 50 cents, so 49 cents I got, and then I bought it for 15 cents back. So altogether I got 34 cents in pure profit, and I did it last week. So like previous week I've done it. So and on Thursday kind of was out of the trade. So I made 2% a week. Okay. Here on that level, I sold $16.5 put. I have it now, and I got 45 cents for that. Okay, so it means 2.5% again for until this particular Thursday. I actually sold it yesterday on Monday until this Thursday, so it's less than a week. You can make 2.5%, which is great. And it was actually out of the money, so the price was 1660 when I was selling at 1650, right? And that level. And again, I have the order to buy it back. It wasn't triggered today, even we had the spike up. But if tomorrow the price will be here, because I could close it for 13 cents. Today, I didn't close. I was a bit greedy and wanted to get this 3 cents, but still I might do it. So I don't like a downtrend. Yeah, downtrend is, so for me, that's the main reason why I sold puts, because if I'm selling $16.5 strike price and I'm getting 45 cents, so my real price is already nearly $16.05. Okay, so which is great. And actually, I paid only $1 for selling and buying this puts back, so which is amazing. Previously, I thought that Australian market can rob you on commission. Right? So actually, I bought shares and sold shares as well. I bought and sold 1,000 shares here. So that was just pure trying to see what the commission and everything. So got to about 1%, and I did it just during the yesterday session, so on Monday. Okay, so just was sitting doing something on the computer and decided to trade it. So made about 1%, a bit less than 1%. But still kind of good, right? So something like that. So this is the trading strategy which I use, and let's have a look at the moment what we can see, because I took it just before the masterclass. Unfortunately, we don't see the prices here because the market didn't show it to me, but we can see the last prices. Okay, so 2 days, 16.5 strike is 27 cents. So, and the price at that time was already $17 when I was taking it, right? So if we go for $17 strike, so it's 34 cents. So it means 2% you are getting for 2 days. Okay, so it's Wednesday, Thursday left, right, guys? So this is the thing. So if you go for $16, okay, but for 9 days, you can get 1.5%, and it means that, I mean, if in order to put shares to you, the share price has to go down for more than $1 now, right? So it's roughly what? Actually, the trade on the Russian market just triggered for me as well, so I made some money there. Good. All right, and so yeah, so you can choose whatever you like here, but options on that particular security is pretty nice, and the spread is low. Okay, so that's why I enjoyed it. Okay, and I have kind of divided part of, so I'm buying 1,000 shares and selling a little bit of trading, right? And at the same time, I'm doing selling puts, so diversifying. Instantly, like, I mean, when it got to this price, instantly I got filled. No problems at all. But I had only 1,000 shares. It wasn't. I didn't trade tenths of 1,000 shares. Okay. So guys, this is the the trade. Actually, I want to record the video about interesting situation I got into with some advisors. Okay, I got into these chat groups where they advise you to buy stock, and it was a very interesting experience, absolutely amazing experience. So I'm going to put some short video on YouTube. So definitely have a look at this. You will really enjoy it. How they make money by making you to lose money. All right. Okay, guys, if you have any questions, please ask. If you want to go through some other companies, we can do that now. We can complete our trading session. I'm going skiing on Thursday for a few days until Sunday, 4 days there. So if you want to join, get it quickly, but probably you won't be able already. So the places are booked completely. And just open chat. Okay, cool. It's so cold, guys. Today in Australia, it's just unbelievable. Yeah, I will enjoy it, definitely, Dory. And probably when I come back, oh yeah, definitely. FMG is going to do much better because 80% of their volume is China. Okay, it's definitely, we might, like the company definitely is going to benefit out of it. But at the moment, PE ratio 4. I mean, like I understand that the Australian market is kind of undervalued compared to US market, but not that much. I mean, PE 4, it's extremely low, right? Yeah, they're diversified. But what I'm going to do, guys, in the future, I'm going to cover more companies from outside of United States, and I have few reasons for that. First of all, that I got married, right? So, and my wife is not kind of motivating me to sit at night and watch the market, right? So I kind of want to refocus on Australian market and see and Russian as well because it's during the daytime, and also Chinese companies on Hong Kong. So probably in the future we'll see more and more companies from that area, and I will find certain subscriptions there in order to get solid fundamental data, right? And we might invest. And also, like United States, I think they can be in huge trouble because they printed so much money, right? that it's definitely creates a huge inflation in like inflation for them. So we see what is going to happen there. Okay, and China, I mean, it has a huge potential there as well. So that's why it's probably a good thing to allocate money there as well. Yeah. Okay. So do you have any? What do you use, Nick, for research? Morningstar or any other source? If you IBKR, yeah. So that's what I was using today for IBKR or other source. Maybe India as well. Maybe India. Just from India perspective, I don't trust too much to the resources. Okay, so it's like VHY. Okay, good. Just type it here and look what's VHI. Strange, doesn't show me anything. Okay, Vanguard. Okay. All right, thank you. All right. Okay, guys. And when I come back, probably it depends on the weather. We'll set the time for picnic or maybe to visit in my place, right? And we have some nice chat here. All right. In any way, thank you very much for coming today. I enjoy seeing you all, and talk to you later. Okay. Bye, guys.
Bye, good.